With us now is Hugh Johnson. He's the CIO of High Johnson Advisors, and Jay Jacobs. He's the head of research at Global X ETFs. Gentlemen, it's good to see you tonight. Hugh, to you first. What are you doing today? Are you sold, so to speak, on this bounce?
Not really. We know that one of the things we've got to do when we hit a bear market that's going to be accompanied by a recession, which is our conclusion, is that we've got to take steps to really defend portfolios. We've promised our clients that, and we continue to do that. So we're doing things like we're reducing our exposure to equities, not a lot anymore, just small steps, and we're also obviously shifting some of the components of the equity component of the portfolio to some of the defensive sectors. Bob mentioned it, healthcare, consumer staples, utilities. Technology still acting okay, and communication services still acting okay. So we're doing some small things, reducing our international exposure, but nothing really great. So we're a little bit worried because we still don't see the so-called light at the end of the tunnel or the end of the current problems for the economy and a recovery. And we won't see that until we start to see containment of the coronavirus. So we're still on the defensive side, but I will say this, is that although we're on the defensive side, our clients and ourselves are very encouraged by valuation levels. This stuff is getting really, really cheap. We don't like to be defensive, especially when things are so cheap, but we've got to see better signs that the economic problems are going to end and a recovery begin, and we don't see that yet.
Jay, how about you?
Yeah, right now we are mostly looking at a market that's driven by sentiment. There isn't GDP data coming out. There isn't really jobs data coming out or earnings data. So right now, all the market is looking at is what is the Fed saying, what is Congress saying, and what is the president saying. Right now, we're seeing massive actions taken by the Fed and hopefully massive actions taken by Congress later this week to really shore up the economy and therefore the market. So right now, we're staying put until we see more development on the fiscal policy side.
Hugh mentioned what's happening in technology. Nasdaq was an outperformer. Are some of those names just too cheap to ignore at this point?
If you're asking me, I would certainly say they're getting...
Go ahead,
yes.
Hugh. I was asking Jay, but you can go ahead and answer.
Yeah, I thought, okay, yeah, no, I think they're very cheap. It's not that I'm going to dive in, though, to technology, and I'm talking about, really, I think that's the part of the market. When I'm talking about the sectors like healthcare, utilities, staples, technology to some extent, communication services, I'm saying, sure, you should have those in your portfolio, but I'm not talking about ramping up a portfolio with equities, even though the market's very cheap, even though we're undervalued. I'm saying, kind of hold the line on your allocation to equities and have some of those in your portfolio, but I'm not talking about ramping up your buying of technology or anything else.
I certainly understand. Hugh Johnson, Jay Jacobs, thanks so much for your time tonight. I know we'll talk to you again soon.